Time now for an in-depth look at the market news as we start the week. And for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you for coming on today.
Happy to be here.
Well, the financial markets have been going up and down for months now on the U.S. China trade war. Data showing China's exports are down sharply. And now we have the deadline coming up on the 15th when new tariffs will take effect. What do you see happening in global stocks in the week to come?
Okay, well, global stocks, after falling on last Tuesday based on some of the reports that you just mentioned in the previous story, like the President Trump's remark that the U.S. China trade war may be extended, it fell until last Tuesday. Then Wednesday it rose based on, I think, two things. The first is one story in Bloomberg saying that U.S. China trade deal is close. Now, a lot of stories have referred back to that story, but there has not been any additional stories which confirms that from independent sources. And then on Friday, U.S. had a very good jobs report. It was much better than expected, 266,000 jobs created. So the U.S. markets have been rallying, but I think they tend to overestimate the value of good news that's coming from the U.S.-China trade talks. So as we get closer to December 15th deadline, I think we'll see a lot more fluctuation. And my personal feeling is a bit pessimistic. I do not think the deal will pass. So I think it's more likely than not that President Trump will put the tariffs on, in which case we'll have, at least for a few days, a very negative stock market followed by a very volatile time, and then maybe a recovery. But then there's a chance that even if there's no trade deal, President Trump will not put the tariffs on the remaining Chinese goods because, well, if President Trump puts the tariffs on the remaining goods are mostly consumer goods. So it'll have a very direct price increase effect on U.S. consumers. Right now, President Trump is telling the U.S. consumers that most of the tariffs have been paid by the Chinese companies or Chinese government, and he's been able to get away with that because most of the goods that have Chinese tariffs are intermediate goods. But once he puts tariffs on consumption goods, I think the consumers will be able to tell that the burden from the trade tariffs goes on U.S. consumers, and that will have an adverse effect next year when President Trump is running for re-election. So even if the deal is not reached, I think there's a fairly good chance that President Trump will not put the tariffs on.
Got it. Well, according to the Korea Development Institute, the Korean economy has been stagnating now for 9 months in a row. They say things are unlikely to get worse, but if they don't get better, then there's concern over a possible recession. What kind of recovery do you think we can expect, and what are the variables here?
Okay, well, the KDI report basically said that we had a very weak demand, both domestic and exports. Manufacturing production fell. Service production rose, but it rose only weakly. Global circumstances still very pessimistic, and exports are not likely to rise in the near future. Now, some optimism in the KDI report is based, I think, on two things. One is that the consumer and business sentiment are pretty optimistic. It's after falling for a while, it's starting to rise up, especially the indices, which looks at the future sentiments. And then the semiconductor prices may go up next year. We're not quite sure about that yet, but a lot of people are betting that semiconductor prices will go up next year, and that will lead to a recovery in Korean exports. Right now, I tend to be a bit pessimistic about that as well. I do agree with KDI that we may have hit bottom, but I don't really see that many factors which lead to indications that there's a rise coming. So the business investment has not really risen, and unless there's a global recovery, I don't think the semiconductor prices will rise. So I don't really see a trigger for a recovery. So even though we may hit bottom, we may skirt along the bottom for a while.
Right. Well, looking ahead this week, the Fed will have its final rate-setting meeting of the year. And for Korea, we have the Green Book report coming out. Tell us about those and what else we might look out for this week.
Okay, well, the biggest item of interest, as we just mentioned before, is the U.S. China tariffs, whether President Trump will put the tariffs on, and that will come on December 15th, or maybe before if President Trump decides to delay the imposition of tariffs. Now, on the Korean side, I think the most interesting report that's coming up is the employment report as well as the Green Book report. The employment report for October was better than expected, but we still lost manufacturing jobs. We still lost jobs for 40 to 49-year-olds. So we need to see whether that trend continues, because that is basically the backbone of the Korean economy. There was a better than expected job growth in October, but those are reportedly mostly government finance jobs. So we'll need to see whether any non-government finance jobs have increased. And then there's also, on the Korean side, we have export-import price index coming, and that will hopefully give us a hint on whether semiconductor prices will rise. And then on the foreign side, we have OECD composite leading indicators. On Korean side, the Korean leading indicators have been on a downward trend for 28 months, which is extraordinarily long. So we'll have to see whether Korea breaks that trend. I tend to think not, but there's a good possibility it will, because, well, the domestic sentiment indices have risen. And then on the U.S. side, there's the ISM Manufacturing Purchasers Index. That's interesting because U.S. manufacturing reportedly is at the same level as it would be in a recession. So we'll need to see whether U.S. manufacturing will still be in a very low level. If they are, then the possibility of U.S. recession is still there.
And we'll be watching all of those figures, Dr. Yang, but we'll have to leave it there for today. Thanks so much for coming on. We appreciate it.
Thank you.